Welcome to Drill Down Earnings. We have quarterly results out from Box. It's one of the 50 most important companies in technology, which is what we cover here at Epistrophy Capital Research. I'm Cory Johnson, Chief Market Strategist. So Q4 2026 earnings for this company, Q2 2026 earnings, better than Wall Street's estimates. They delivered $294 million in revenues, well above my estimates for the company, as well as it's 9% year-over-year growth. Importantly, the growth rate accelerating for this company. That's why they beat my estimates by so much. This is on the on the strength of their AI offerings. And I want to talk about this a little bit. So, if you think about what Box does, it helps organize information and access information that companies store, enterprise data, right? But let's think about it more metaphorically. If you're the kind of person who's got a messy garage, that's not me, or a messy basement, yeah, maybe a little bit, you know what's you just put away, you know where things are, and you know how to use those things, and maybe software could help you better access the stuff that you know where it is. But in the world of enterprise data, Box maintains that 95% of the information is just laying around. It is unstructured data. They don't really know where it is. And software is not the best tool to access it, but AI is. AI agents are. And Aaron Levie, the CEO of Box, makes a very compelling case that AI agents will be able to access and use and find new ways to use all that unstructured information, that stuff that's laying around in the garage in the basement, and put it to work. And for that reason, the data will become so much more valuable, and the tools that access that data will become so much more valuable. And yes, Box will become so much more valuable. So these guys are beyond excited about AI because it makes all the stuff stored everywhere potentially valuable. So they talked in the quarter about what was going right for these guys. They talked about their enhanced extract agent and a beta of their model control protocol server, which is going to have support for OpenAI's GPT-5, Anthropic's Claude 4, xAI's Grok 4, all inside one singular Box AI studio. They also talk about how their Box Hubs, another product, is going to be generally available with page design, stronger governance controls, APIs that lots of different content publishers and knowledge sharing tools can access. So again, trying to use these agents to access more information more simply, all through Box's interface. And they're talking about big accounts came in: Marriott, Penguin Random House, yes. Japan's Ministry of Defense, California's Department of Health Care Services. All of this helping Box, yes, grow revenues, grow customers, and grow profits. Operating profit margins at 7% now, and get a lot of orders. Really interesting for this company that their long-term orders now, their long-term RPOs, they added $812 million of that this quarter, $664 million in short-term RPOs. It's business that they expect to be delivered in the next year, contracts they've already got signed. So the market was trying to figure out these numbers because the guidance wasn't super bullish, but the RPO numbers were, or at least they portend to that. So initially the stock was up, and then it was down, then it was up again, up about 3% in after-hours trading during the conference call and kind of settling out there. That's after a 9% gain of the last year. So this company still tailing the giants of AI, certainly, but even the S&P 500. Now, I mentioned the RPO growth. The RPO growth is growing so much faster for revenues than revenues. Last quarter, even more so, but 18% RPO growth when revenues are only growing at 9% suggests that these strategic partnerships with, OpenAI's ChatGPT, with Snowflake, with Anthropic, is delivering the comfort for customers to put long-term orders, even as they're starting to roll things out. I didn't mention the deal they announced with Salesforce as well. So lots of deals from Aaron Levie, the CEO. Here's what he had to say.
So many customers are coming to us and saying, okay, we'd like to be able to run AI agents on that data to extract the critical details from those contracts or those invoices or, healthcare data that might be coming in. And then we want to be able to automate some kind of workflow or business process that's tied to that data. So this could be a client onboarding process. It could be a lease agreement review process. It could be a loan origination process. So the first step is get and extract the metadata from those documents and put that into a structured database or data store, which is something that Box has had for many years. And then be able to go and automate a workflow.
Aaron Levie, friend of the show. Yeah, we've had him here on the Drill Down podcast, and we'll have him back, I'm sure, in the near future. But what's it all mean? What's your big Drill Down earnings takeaway, and what's the one number that tells you a whole lot? Well, Q2 2026 Box earnings were good in this quarter, $294 million of 9% on a year-over-year basis, accelerating growth, all about AI, all about agentic AI, and the tools they're selling right now, accessing all the great stuff, whether it's ChatGPT or Claude or Anthropic's Claude or xAI, whatever, Grok, They're using all those tools to give their customers ways to access unstructured information. And the proof is in the pudding. That's the drill down earnings bite. It's not about pudding. It's about RPOs, remaining performance obligations. This company saw their RPOs jump 18% in the quarter. I think that's the most important number that they delivered. I mean, that's twice the rate of growth for revenues. It's a good sign for Box. All right, thanks for checking out Drill Down Earnings. Please subscribe to us. Just hit that subscribe button, whether it's on YouTube or Instagram or TikTok. We're at Drill Down Pod, at Cory TV on X. You can follow all the latest from Epistrophy Capital Research.